I'm not sure if I can come up with five in any kind of valid order, but I'll certainly come up with a couple off the top of my head. Again, it's the people. You need to really look at who are the people involved with any project, and I think that is what Julian said. If he's looking at a project pre-token, if he doesn't like it, he's not going to suddenly start doing it post-token. It's always going to be the human and the quality of the project. But certainly with due diligence, I think you have to look at from a smart contract software perspective, you have to look at who are the people that are actually writing and producing these contracts, who are the legal and who are the business administrative people that are coordinating to produce a future return in some way. So I don't think it changes much, but I think there's definitely a strong software component in making sure that it's valid.
I mean, honestly, if you look at VCs and stuff, they have teams of people just doing nothing but looking at deals and deals after deals. And I think, to be very honest, like even for tokenization at an early stage, it may not be for a retail investor to kind of invest. It could very well sort of be institutions from the start. Let's say, for example, you have a toll road in China that was looking to raise 100 million, and if in the past, you had to find other institutions that would take 100 million, there are probably like a couple of pension funds that will be able to swallow something that size. But I think what tokenization can potentially do is to break that up into, let's say, 10 different tokens, but each of 10 million, in which case you have 10 institutions that can come in and actually invest that. So personally, I don't think that it's going to move like right away to retail. And it's just there's just no way around it. You just have to do your own research, and there's no sort of like magic solution. Just that because these things are tokenized, that you can kind of like find some way to do like your research in a much easier manner. Like that's just not going to happen. But where I kind of see it like happening in the earlier stages is really in the institutional space for these sort of large scale investments. Where you can sort of break it into like smaller chunks, where it's then more tradable, more liquid in the secondary market for institutional investors.
Thomas, from a kind of a regulatory point of view, institutional point of view, because you're our guy on this stage for that, do you think there should be standardization? Do you think that there should be just a series of things that should just be the basis for any STO?
I mean, you've got to break it apart, I think, into the asset classes. Meaning, are you looking at existing processes that are going to get disrupted? Meaning equities trading, which that's just a leap of faith into a different process of time, specifications, location, meaning who's regulating it, what exchange is it sitting on, what are the processes for. And really, one of the keys that are going to grow out of this is basically the custodian collateral management systems on the back of it. How do you domicile the asset? Not just on a digital ledger, the actual where you store it. And then you got the non-liquid assets, which are like immovable objects, like buildings that are going to get put into that space. I think if you look at disruption versus changes, I think is that are you disrupting an industry? Or are you changing an industry? Or are you creating a new industry? And I think those are the three tranches of what we're looking at in the digital space. If you're changing something, it's just a better system, right? And there's already companies that have taken blockchain just at the back end and going, it's just a better way to own my spreadsheets. Right? That's just change. Disrupting is like what these guys are trying to do in real estate. People don't own real estate this way. They don't fractionalize ownership models. They don't register the ownership structures of real estate or financialize real estate or commoditize real estate as they're doing. Right? And then there's the new businesses. Well, I mean, ICOs are fundamentally new businesses. So that's what I think is what. So what people are realizing, it really isn't, it's just a change in how we're going to raise capital going forward and who can raise capital going forward. The regulators have always adopted the protect the mom and pop attitude, especially in Asia. And it's really an equity-based attitude of who are you protecting, right? The above the line, below the line, the high net worth, the accredited investor guy above the line, basically out here in this part of the world is hey, it's buyer beware, you should know better, you got enough money, and you should be astute enough to go into that space, versus below the line. I've been in the commodity industry a long time. I actually never, ever had anybody that I knew personally ever invest in my business. It was just ethics for me to not go below the line, like going, a friend of mine was a policeman. I knew he wasn't making enough money to be, bombing around inside Comex Gold and trading oil, right? You should stay in the stock market where they're protected. I think you're going to have the same type of attitude in terms of the disruptive nature of what we're calling STOs. It's a restructuring of the ability to own, trade, financialize, and collateralize assets in the world today. There are standardized assets that could be done that way, and there's the non-standard. So we're bringing the non-standards in. I think that's the key.
So so basically you're flipping my question on its head, and I appreciate it, because the premise from which I asked it was from an STO point of view. But what you're actually saying is
STO is simply a vehicle for something that you should be paying attention to, which is what Chad's point was, which is what is the underlying asset you believe in it? And that underlying asset, as you've described, is disruptive, new business, or
new industry.
so thank you. Julian, how about you? Let's talk about STO. There's a lot of stuff happening. So as Thomas reminded us, and Chad did, and Andre, which is, let's just take a look at the people and the ideas. What are the opportunities that are coming out in the STO space? What, in your view, should investors be assessing?
Yeah, a few things. I mean, there's all those layers of what people should be doing, and should you hire this and hire that. People should be doing that with ICOs. So I think now we're talking about securities projects, STOs we're talking about. I mean, even for us, we're building this platform, we're building in all these partners that are specialists in that. So eventually, you can trust that it's all working and it's all being done properly. I think. So what's really interesting is you can. Right now, we're building the industry at the same time. We have primary issuance, the first STO is coming out. We're also building these exchanges. Why launch an STO if you can't trade it? Why build an exchange if there's no security tokens to trade? So it's kind of super, super interesting. It's also somewhat complex at times because both these things are happening at the same time. I highlight that because we talk about what are the opportunities. A lot of the opportunities that we're seeing right now today are a lot of the first STOs coming out are really just opportunities to invest in startups, issuing a token versus a piece of paper. There's a lot more risk behind that now, or not if they're just saying we'll issue a token and maybe one day it'll trade, and if not, you just have a share in the company. So there are a few different flavors of that, but I think that's sort of where the interesting opportunities are right now today. One thing that has been incorrect, the guys that have launched STOs today, most of them have failed. Most of them failed because they tried to put it as stable cryptocurrency, and it's not stable cryptocurrency, it's a share in a company or it's a share in a building. So that was a big failure, apart from thinking rich crypto people weren't very smart and they buy anything. So the original birth of STOs was a failure, I think, and now we're coming to sort of 2.0 already. And yeah, I think the interesting companies, the interesting STOs will be ones that potentially have a tradability, or there's a high chance of that. Everyone now saying, hey, invest in my STO, it'll trade on Open Finance or T0. These are platforms coming out in the US that aren't open today. So a lot of these are somewhat empty promises of tradability because it's not guaranteed, because they're not even open. So whether they've got a contract or not, well, a lot of things are going to change, especially when 10,000 STOs turn up at the gates of these STO exchanges and say, we all want to get in. Obviously, it's going to be quality over quantity. Yeah, look, so we're taking a very kind of exploratory approach as a platform. We will be launching soon some projects. Some of them will be the startups. So we're going to make the calls on what we think are legitimate teams, big business opportunities, and also where if it's an equity in a startup and if the token never launches or it still just stays, it's still a good investment, and that won't be a bad